Hi traders, this is Steve here from Sure Trading. In today's analysis, we're going to be having a look at Redefine Properties, and we're going to decide whether or not it's a good idea to add this to your investment portfolio. But before we get into that, I just have a few things that I need to say. Firstly, neither myself nor Sure Trading are registered financial advisors, so anything I say in this video mustn't be seen as financial advice. And as always, if you like the content that I'm putting out on this YouTube channel, please like the video and subscribe to our channel. If you look down in the description below, there's links to our website where you can find out more about our subscription and mentorship packages, as well as links to getting the Velocity Trader platform and our free Telegram channel where we share tips and advice. So enough about that, let's get into Redefine Properties and see what it's all about. So here I am on the Redefine Properties website, just to get an idea of what they are all about and what they do. Just have a look at what they say here. Property is our commodity, but people are our business. We believe that to create sustained value, we do it from a place of purpose. So their purpose is to create and manage spaces in a way that changes lives. Their vision is to be the best South African REIT out there. If you don't know what a REIT is, it's a real estate investment trust, which is a company that owns, operates, or finances income-generating real estate modeled after mutual funds. REITs pool the capital of numerous investors. This makes it possible for individual investors to earn dividends from real estate investment without having to buy, manage, or finance any of the properties themselves. So that's basically what a REIT is, and that's what Redefine is. Let's just go and have a look at what they invest in. So they say Redefine is a diversified South African REIT with exposure locally and abroad. We manage a diversified property asset platform with a value of 75.3 billion rand. So if you have a look here, they say they invest in South Africa, Poland, and Australia. As always, let's go and check out the charts and see what the technicals are looking like before we dig into the fundamental side. So here I'm on a week chart of Redefine. As I mentioned earlier, we're on the Velocity Trader platform. So if you want to try out the platform yourself, whether it be a live or a demo platform, have a look at the description below and there's all the links there. So we see from 2011, that's as far back as the data goes, they were trading at around 7.26 Rand per share. They went up quite nicely over the next couple of years, with their peak over here in 2015 at around 12.60 Rand a share, and then basically went sideways for quite a while. Started going downwards in about 2019. Quite a lot of dips over here, even before the COVID pandemic started, and then obviously with the COVID pandemic, they took a massive knock. Their lows down here were 1.39 Rand a share, and since then they've been going up in general, and they're currently trading at about 4.50 Rand a share. As you can see here, if we just draw a line, they're currently bouncing off a trend line in an upward direction. Still have a lot of ground to cover to get back to their highs over here. But yeah, looking as if it's going up in the medium term at least. So let's go and see what the fundamentals have to say about this share. Okay, so the first thing we look at is the past performance of the share to see if it's showing increasing revenue, earnings, and cash flow. The first thing that pops up over here, the annual returns growth is 60.9% down over the last 5 years, which obviously isn't a great sign to start off with. Let's have a look at their revenue and earnings. So if you see their revenue was on a steady climb throughout 2015 and 2016. Reached a peak over here in February 2020 of 9.44 billion rand per year, and then quite a strong decline in its last the last results that came out in 2021, February of 2021, is 7.185 billion per year. Let's compare that to their earnings. Now you can see their earnings were pretty stable for a good couple of years, and then at the end of 2019 they took a massive dip and went all the way down here, and they had a 188.4% negative profit margin, so they weren't doing very well. They've improved a bit in the last while, but still down 122.4%. So they're not currently profitable at the moment, which is obviously a major red flag. If you look at their cash flow here in this pink line over here, been pretty stable, and currently it's at 3.59 billion rand per year. So just looking at those figures, especially these earnings figures, it's not looking extremely rosy at the moment, but let's go and have a look at our next criteria, which is to check out its debt levels versus its equity and cash flow situation. So let's start with its equity levels. Back in 2014, we were around 39.7 billion rand in equity. It reached a peak over here of 58.1 in August 2018, and now it's gone down again to 38.8 billion rand. Let's compare that to the debt. So the debt's been steadily climbing over the last couple of years. And we see over here at one point the debt to equity ratio was 104.1%, and then they managed to lower their debt levels to the current levels, but still an 83.2% debt to equity ratio. So if you have a look at these little notes further down over here, RDF's debt to equity ratio is 83.2, which is considered high, which is obviously a bad sign. Their debt to equity ratio has increased from 53.4 to 83.2 over the past 5 years. Their debt is not well covered by the operating cash flow, and also their interest payments are not well covered. So these are all obviously red flags, saying that this might not be a good investment at the moment. And finally, what we look at is the company's intrinsic value, and what the current price is compared to this. Let's go and have a look at that. So according to this website, Simply Wall Street, Redefine is 30.3% undervalued compared to its fair value. If you look over here, the current price is R4.58 per share. The calculations that they've done say that the fair value for the share would be R6.57, so that's 30.3% undervalued. Let's go and have a look at the chart and see where that would be on the chart. R6.57. So R6.57 would be somewhere around this area over here. As you can see, this is kind of where the shares started to plummet back in February of last year. So basically what they're saying is that there's room for growth at the moment to get to around this level over here. Overall though, the picture on Redefine Properties is not amazing, so I personally wouldn't consider this as a great investment at the moment. But who knows, things change, so always keep an eye on them and see how their financials are looking, to see if you might want to invest in them in the future. So now the final thing we need to do is to spin the wheel and find out what company I'm going to be looking at in next week's video. So there you go. The next share we'll be looking at is SPP or SPAR. We've already looked at ShopRite Holdings, so it'll be interesting to compare the two being in the same industry. So I hope you enjoyed this video. Like I said earlier, please like the video and subscribe to our channel. And if you think it's good content, please share it with your friends. We'd love to see you in the next video, so keep an eye out for that. And in the meantime, if you're interested in any of the services that we offer at Sure Trading, please go visit our website at suretrading.co.za. We hope to see you in the next one. Cheers.